Hello innovators, hope everyone's had a great week, hope everyone's having a great weekend as well. I was planning to just kick back this weekend, but I thought, you know what, there's a bit of movement in the market. Let's do a little market breakdown and have a little look at what's currently going on in the world of cryptocurrencies. Now, starting off, we've got a new article, and of course the man of the hour is back on the scene conveniently as BTC starts to hit the $30,000 support level, of course aiding what is potentially going to be a little bit of a temporary pump to the upside. Now, it's no shock to anybody that Elon Musk is back on the scene, again going down the environmental friendly route for Bitcoin, claiming that it is now almost at, well, apparently it is over a 50% renewable energy phase now, where the majority of the miners are already shifting. So as we can see here, he's pledged to re-accept crypto payments once the percentage of renewable energy usage is most likely at or above 50%. However, when we go a little bit lower, after surveying 32% of the current network, the participants were found to be using an energy mix that was 67% sourced from renewable energy providers. Now, this is a good thing. Essentially, whatever he is seeking and preaching over here is absolutely correct. Bitcoin is not environmentally friendly and it's not sustainable, especially over a longer period of time. So it does make absolute perfect sense what he is fighting for here and what exactly he is trying to achieve. However, there is an issue with this. And if you have read the BTC document, hopefully you guys have read that by now. It is available for absolutely everyone. This is pushing the agenda further of Bitcoin Lightning Network. Now, recent analysis of Bitcoin's energy consumption by leading cryptocurrency exchange Coin Corner found that the introduction of the Lightning Network, which makes Bitcoin transactions more efficient, means its carbon footprint is relatively negligible compared to other everyday activities like sending an email or tweet. As we can see from the tweet here, one tweet from Elon Musk produces the same carbon emissions as 385,999 Bitcoin Lightning Network transactions. Now, this is the clear agenda here, and if you've read the BTC document, you would already know how significant the entities behind the involvement and the funding of Lightning Network is, which is inevitably going to end up as the complete centralization of the Bitcoin network. And please, I highly recommend you read that document, because the amount of research and hours that have gone into it will show you how not everything is what it seems. The Lightning Network is essentially controlled by the same individuals and the same network of people and entities that Bitcoin was allegedly fighting against. Allegedly, Bitcoin was the enemy of these particular individuals. However, it's now the enemy that is in control of Bitcoin. So it's interesting to see this shift over, and of course it's more interesting to see that Elon Musk went a little bit quiet. Now he conveniently pops up, and I think it's very important to remember here as well, before we go into a few more articles, that Elon Musk is not really here to aid the cryptocurrency industry. He's not necessarily pumping and dumping the market. The way I see it is, although we see positive outcomes from when Elon tweets something positive, at the end of the day, everything is manipulated. The cryptocurrency markets are highly manipulative, and they are controlled by much higher entities than we can truly understand. So when you think about it logically, when Elon Musk drops a tweet and price starts pumping almost instantaneously, realistically, how many people have that much liquid fiat or stable coins on an exchange ready to start buying up? And institutions most definitely are not just buying up because Elon Musk says so. There is a much larger group of collective people at play here, and it's very important to kind of strip away from the news. Although we cover the articles here, let's be honest, it's not really going to benefit us in any way. It's good to gain the information for stuff like this, which is true, which is real. The EU cracking down on anonymous crypto wallets. At the end of the day, the main priority at the moment in the cryptocurrency market is overcoming the hurdle of regulatory matters. Until we see this regulation come into play, I do not see much of a positive or bullish outcome continuing until this regulatory action is solved, and especially until the Ripple Labs versus SEC court case is finally done and dusted. Until then, unfortunately, I feel the SEC case is going to linger over the cryptocurrency market and will have much larger repercussions for the entirety of the cryptocurrency arena until some form of outcome is made. And what I'm really verging to at the moment is the SEC actually losing the case. However, this could be a great justification to retaliate with a larger push for regulatory action. And as we can see from Binance alone, they are already coming after Binance quite heavily because these individuals, these regulatory bodies, they are looking to leave a significant impact. They want to send a message. And by targeting the biggest exchange, Binance, it could send a huge shockwave through to the market. And I do feel until all of this uncertainty is out of the way, it could inevitably lead the market to go a little bit lower first before we fill in some unfulfilled territory. So there is also this as well, lingering over the market. Tether claims it will conduct an audit in a matter of months, which is music to our ears, as again we've seen there has been no real audit. Again, if you've read the BTC document, I will show you exactly how fabricated everything they've been providing is, how they've lied continuous times about their backing, and how we've only just recently found out that they are not fully backed with one-to-one reserves of US dollars. They are backed by a basket of different instruments, investments, and just crazy things that are essentially fabricated out of thin air to create the value and the illusion that they are backed one-to-one by the amount that they are minting on a continuous basis. And it's no surprise that since the Tether minting has taken a massive slowdown, the BTC price has conveniently stopped pumping as significantly as well. Now, the final thing to touch upon quickly is JP Morgan just became the first big bank to give retail wealth clients access to cryptocurrency funds. Now, considering JP Morgan have been voicing a relatively bearish outlook and bearish bias on the cryptocurrency market by allowing an even larger wealth to basically gain access to the market, because retail wealth is still wealth. Remember, you can still be considered a retail client. Even if you have $1 million, $10 million or pounds, you are still considered a retail investor, technically in the terms of the difference between retail and institution. So by providing an even larger gateway into the cryptocurrency market for individuals, whilst they are voicing their own bearish opinions, there's no doubt in the back of my mind that this could potentially be aiding a much larger sell-off to follow. Institutional wealth, especially with the input of CME futures from 2017 onwards, the market didn't recover for a very long time. Now, judging from the fact we have new derivatives being available, ETFs being pushed forward, including Grayscale looking to open their own ETF, this is a big telltale sign for me that something drastic could be following from here. So if you want to really read about this in depth, for you guys who haven't yet accessed the BTC document, by the way, simply just head over to my Twitter. I've pinned the message now to make it as easy as possible. There is a link here to create a free Innovation Markets membership account. Simply just go onto here. You do not need the coupon code. Proceed to checkout, create your account. Very simple stuff. Then you go on the website, go all the way down, and then download the apps that are relevant to what you want to use. So you can download the mobile apps for iOS and Android, and you can download the desktop apps for Mac and Windows as well. That's all you need to do. Log in with your free account and you get access to the BTC document. Now, going over to the charts, the first thing that's very interesting to me is we have seen a little bit of a bullish reversal. From a weekly perspective, for me, this is absolutely minimal, because I'm really working off that weekly time frame at the moment to give me as much clarity as possible and not get too caught up in the 1 hour time frame. And again, if you look at the 1 hour time frame, this would look like a huge bullish outbreak. 4 hour wise, if you just got rid of all the other price action, we are seeing bullish momentum after a very long time. However, let's look at what we've seen historically. It is just, it's all within the relative price action at present. So I'm not getting very excited, to be honest with you, because the bigger picture is showing a much larger telltale sign of what could still be occurring in the market. What is interesting, however, is the BTC dominance slowly growing, and I do believe that the BTC dominance will be slowly but surely achieving that 50 to 60% dominance very soon, and it's looking very likely at the moment. Even if we were to do some very small analysis on this particular pair or this particular chart, the BTC dominance is very clearly gaining traction. And from a simple Fibonacci perspective, as we can see over here from A, B, C, we've hit that 78.6% retracement precisely, which does inevitably lead our upside targets on the BTC dominance growing towards that 51%, towards the 54% region. But if we do zoom out, we do have a clear level of support as well. Not that this is a chart that you would necessarily be using crucial technical analysis on, but it can really give us an overall idea of where this may potentially be heading next. And by looking at how it's been working, it has actually been respecting technical analysis very nicely. And if we also do a top to bottom Fibonacci as well, we can see a nice zone where the 61.8% retracement is, giving us a nice clear upside target of breaching into that 50 to 60% BTC dominance, which, as we of course know, and as the market has proven now, even when that BTC dominance goes down to 40% as it done recently, which was our target, price still dropped and the rest of the market still went down with it. XRP, Ether, LTC, the main ones we'll be focusing on in this video as well. Even when that BTC dominance went lower and significantly weakened, it still had a massive control over the market, which just really goes to show that at the moment Bitcoin is the big daddy and Bitcoin is the one that is in charge of dominating this market. So we have to always pay special attention to BTC, which is where the predominant focus for me remains. I'm not too worried about anything else really. As you guys know, my main play is on XRP, and that's what I'll mostly be focusing on, because if this all comes through, I'll be making more than enough money than worrying about having to buy 10, 20 different shit coins or buy loads of different meme coins purely for the sake of trying to make money. And that's one of the biggest misconceptions in this cryptocurrency market. I take things so simplistic. I do not try and buy 20 to 50,000 different coins in hopes that one of them will moon. I will occasionally invest in a few others, not really mind about any temporary drawdown, just to try and make some additional money. But when it comes to making serious life-changing money, I like to focus on one or two specific cryptocurrencies in particular and time the market precisely to slowly grow my holdings. At the end of the day, accumulation is key. That is the goal of this game. And so many people can get caught up in the fact there's 50,000 or a million different cryptos out there and they're trying to just pick the best ones as if they're stocks. But unfortunately, no matter what real technicals you use, no matter what real fundamentals you use, there's no real guarantee they're going to work, no matter how much research you do. And plus it overcomplicates the process. I always get messages saying, have you seen this new coin? Have you looked into this new project? And quite frankly, I couldn't really care less, because I believe in utility. For me, XRP has the greatest utility. I'm not an XRP shill because you don't have to buy it. No one's forcing you to buy it. I just like the way it moves. I like the way it reacts when it goes to certain levels. And I like the way it surprises people. And that's made me a lot of money over the past few years. And I stick to it. And I really keep it as simplistic as that. Another interesting thing to pay attention to here, of course, is the BTC CME futures gaps. Now, we do have that lingering gap up at the $48,000 region. And yesterday, Friday, had another live session with the Innovation Markets members, 3 hours long, not only just showing them some new technical analysis methods I've been looking at, but we essentially broke down XRP for almost 3 hours straight. And I'm obviously not going to say exactly what our game plan is, because there's some beautiful opportunities lining up, but I will give you guys a bit of an insight into what we're currently looking at and what we believe could potentially be happening next in the market. I do feel like we've personally cracked the code, and if it does come through the way we've been analyzing it and breaking it down, it will be truly magnificent. But the most important thing to look at here on CME Futures is the clues it leaves behind. These are essentially footprints that have been left behind on, let's just say, a muddy floor, where as private detectives we can then use our telescope or our magnifying glass to follow those footsteps to hopefully lead us to the path of success. So what we see at the moment are some gaps lingering above and below. These gaps are still a crucial area of interest for me, and I personally feel BTC will be coming down to $18,000 to fill this gap. And what I feel could be occurring from this particular gap being filled is a significant rally back to the upside, where we will then continue all the way back down to $10,000 and potentially even $6,000, which is still very real for me. I did have that timeline of hopefully around July, August. However, it does feel like it may not actually be coming through. And I'm here to put my hands up and say, look, at the end of the day, the timeline may not come through, but the targets are still very, very valid and very, very real. Now, with this timeline, the reason I'm actually stripping this away is because if we go over to the BTC timeframe or the BTC chart overall, I am starting to see a crazy similarity from 2017, 2018, and 2019. And I personally feel we could be mirroring that exact same movement and going into what could be a extended bear market. We already feel like we're in this bear market. It's already technically started, in my opinion. I do not feel we're in a bull run anymore. And It's very, very important. I cannot stress enough how important it is to analyze this market without the idea of a bull run in your mind. The biggest problem is, and the biggest misconception is, we are always in a bull run 24/7. Now let's be real, from a monthly time frame, of course, overall, higher highs, higher lows, we are in a massive bull market. We are continuously in a never-ending bull run, essentially. We are creating those higher lows, but the markets move in cycles. And at the moment, as we've seen historically, when that bearish monthly candle comes following a significant bullish rally, it's often a sign the market is going to shift into the next cycle, go all the way back down, and then gear up for the next big moves. The only difference with this BTC rally is it has exceeded expectations unbelievably. Me, myself personally, I had no idea. I put my hands up 100%. I had no idea we were going to go to $65,000. That was beyond me. I thought 50K, cool, that should probably be it. But when we pushed through to $65,000, the level of euphoria that was achieved, and as we saw, right now the crypto market is dead. No one's really pushing it anymore. Those Telegram groups have gone quiet. Everyone's suddenly a motivational talker these days, preaching hodl, preaching this, preaching that. And as we've seen, hodl is not always the way forward. But because that euphoria has now been shattered, and because we saw a much larger euphoria than those 2017 levels, for me, it personally means there's going to be a very big shakeout coming into play. Right now, at this particular region, this is starting to remind me of the 2018 $6,000 support floor. For you guys who have been following me through this period of time, this was a tedious, painful, agonizing wait, because we knew that BTC would break below this particular level because it was just too simple and too easy. And judging from what we're seeing over here now, following that significant movement to the downside, I personally feel there is going to be some severe consolidation that will follow very, very soon. But in the meantime, if we focus on the current price action, we can already see the clear head and shoulders formations. You've got the shoulder, head, shoulder over here. We've also got the shoulder, head, shoulder over here. So we've got two significant larger time frame reversal patterns that have already formed, plus we've already broken through. So if we go back to the CME futures gap at around $48,370, we can see quite clearly $48,000 over here corresponds beautifully with the prior level of support over here that was broken. Going back over to that daily time frame, this was a crucial level. Reversal, reversals, and broken through. We haven't come back to retest this level just yet. So this is clearly still a very valid area and something we absolutely cannot disregard as a possibility for price action to come back and retest. Now, my biggest problem at the moment is because I'm analyzing this without the bias of being bullish or bearish, I'm simply analyzing the price action at the moment. I'm utilizing that to my advantage to have a completely unbiased look and hopefully put this into my favor even more. Because everyone at the moment is so obsessed with seeing 100K, 250K, or even $1 million BTC next, they are basically viewing absolutely any form of price action as a sign that we are going to gear up as bullish. Now, let's just strip this all apart for a second and go back to break this down, how I've been breaking it down very recently. So this for me is what I like to call a danger zone, because if we mark this level out, we have gone from a significant crash taking out a crucial bullish rally to then consolidate. So when we look at this from the perspective, as I always teach you guys, the battle of the bulls and bears, after the bulls were regaining their territory, it was very clear over here that there was a struggle to break back above. So with the bulls failing to break across this territory, it was inevitable the bears would eventually take over and gain the momentum to wipe out the bulls. Now, because this has happened, we of course have seen a massive reality shock for many people that things could be changing to a negative perspective and a bearish perspective. Now, what's happened since those bears have taken control? We've not only taken through the $48,000 support over here, which many people believed was the dip. And as we've seen continuously in this market, my biggest indicator, as many people know, is Twitter. Go onto crypto Twitter, that gives you the best indicator you need of what will potentially happen next, because the euphoria is often a sign, and as the euphoria grows in the cryptocurrency market, that inevitably means that eventually there's going to be a lot more bearish momentum to potentially follow. And any form of upside movement we personally see from here onwards, if we do even see anything really exceeding the current price action that we're seeing right now, it's going to be short-lived in my opinion. And even if we see that $48,000, $50,000 drive, that will likely be the temporary movement we're looking for. And this will, of course, gain that euphoria back into the market. This will entice people to continue buying again, getting excited, buying every single dip that potentially happens from a short-term movement that will inevitably wipe them out even further and leave them in a much larger significant loss, because they will be buying at continuous high prices. Now, from this crash down here, this is why I am still relatively bearish and believe that what we are seeing right now is a trap for buyers to get back into the market before they get wiped out one more time, and then we see some form of rally coming in. Looking at this weekly time frame, upon breaking lower, the bulls attempted to regain their territory. However, they could not breach back above $41,000 approximately. They attempted again, they were pushed back down. They attempted again, we had a strong bullish candle over here. However, they attempted again, failed to break above this wick over here. Let me just mark that out as precisely as possible. We failed to break above and we actually spiked through this area, gaining more necessary liquidity to push price back down. Now, since we've seen this bearish candle, all we have seen since crashing lower is 3 weeks essentially of bullish momentum. We've had 3 weeks of bulls attempting to break back above. However, this was swiftly met with a reversal and a culture shock back down to the same prices they have been trying to push us through. Now, since we've had this bearish candle, there have barely been any buyers in the market. We have been progressively moving lower and lower and lower. Following this bearish takeover once more, we can now see there are not enough buyers in this market at present to even get us back above $41,000. This is showing a severe weakness in the market and a severe lack of buyers, which people, I feel, are ignoring the signs of right now. As we can see, breaking this down even further, just to focus on this particular price action, the bears, imagine these are the bears, let's make this red. Oh, I selected the wrong tool. So let's make this red. Let's turn that up a bit. This is a level of sellers. Now, as we can see, price pushed up, the sellers pushed them back down. The bulls pushed up again, the sellers pushed them back down. The bears continuously show them you are not passing this level right now. And the bulls are inevitably getting weaker and weaker and weaker in the process. They gain the strength to push up higher. The bears let them have their fun. The bears brought them back down to reality. Now, since that point in time, we've crashed below this level, which also now becomes a clear level and zone of support turned resistance. If we make this white, slowly reduce this entire zone has now been broken. And if we pay attention to the price action over here, since we saw that significant crash lower, this particular region of around $34,700 or so became the support floor. No candle body closed below. Same over here, same over here, same over here, same over here, and same over here, and also over here. 1, 2, 3, 4, 5, 6, 7 weeks of straight consolidation and price failing to break this level. Now, whilst many people viewed this as a crucial level of support and a key insight essentially to this being a huge sign of a breakout to follow, I saw quite the opposite, because although we were holding this support floor, there was no real bullish momentum to the upside, indicating that we would be able to actually rocket off this area. And this all changed from the 5th of July and essentially the start of July, because for the first time in 7 weeks, a candle closed bearish and below this particular level. The following week, we went even lower, closing within this region, driving price down to fill this area once again. So now we have another simultaneous area where the bulls are fighting to regain control of. The only difference is this is their final floor of maintaining. And if this floor gives way, which is very, very likely at the moment to give way, there is no real room to the downside besides where those CME futures gaps are, which gives us a clear indicator from around $18,000 or so as to where price could be going next around this particular region. Now, judging from this weekly price action as well, let's just have a look at what I just covered again in a bit more detail, utilizing the candlesticks themselves as a clear indicator. Because if we look at the downside, number one, there's more wicks to the downside, which shows there is a much larger amount of pressure being applied to that downside by the bears. Whereas if we look at the upside wicks attempting to push through and the bulls looking to gain control, we only have around 3 weeks worth really of significant bullish momentum. And now we've broken below this particular support floor over here, we can see quite clearly a very small upside wick. The bulls couldn't even gain control in this particular week. The second week they tried, they could barely make it to 50% of this bearish candle. The following week, the bulls had no control whatsoever. The bears dumped down, closed below this level. We then had a retest of this exact level of support term resistance. The bulls couldn't breach back above. So what they tried to do here is regain that territory, but the bears had now taken over. So the buyers had shifted to sellers. So the minute we came back to retest this territory, the bears took over once more, closing much lower in this region over here, entering into this territory where all of these wicks are located. Now naturally, coming down to this crucial level where we've seen 2 significant reversals before, price action and the bulls would likely take over to regain that territory. Now this weekly candle closes in 1 day and 10 hours. And as we can see at present, we have not yet broken back above this wick over here. So if this ends up rolling lower and closing in a consolidative manner, this makes things even more interesting because this could clearly be an early week drive up before potentially closing lower. So my main focus at the moment is seeing how this weekly candle is going to close, because that could then be continuing the bearish momentum down, with each wick progressively getting lower in the process. And if this is to be the case, we could be seeing a little retest over here, but all in all, we are now breaking into a whole new area of territory where the bulls are struggling to regain control of. So naturally, everyone's seen this now and they've said the support floor is holding, happy days. I think quite the opposite, because if we look at this from this perspective, or we even look at the bullish momentum here. So I've gone on Twitter and I've seen everyone screaming bull run, everyone screaming this is it begins again, the rally's back on. Let's just mark this particular candle out here. So because of this candle, and this is the problem with most people and market participants, because they're plagued with the ideology of a never-ending bull run, they will view any form of bullish candle as a sign that we are going to go to the moon. Unfortunately, we have departed from the moon. If anything, we need to return back to the moon, because we have far exceeded the moon this time. We are in a whole different solar system right now. We are outside the observable universe, and we are trying to return back to the moon, because the moon is a equilibrium and a level of safety much, much lower. Now, look at this highlighted candle over here, and let's just zoom out for a second and put things in perspective. If we just zoom out entirely, let's even make a line chart over here, and just look at this overall line graph. Now, what we can see over here is this highlighted zone. When you zoom out entirely and look from the bigger picture, should we make that green just to represent the bullish momentum? That right there is what people are now using as an indicator that the market is going to reverse. But what these people are not looking at, because they're essentially just blinded, let's now mark out the very top over here to the very bottom down here of what is currently occurring in the market. Now, let's put this into perspective here. This is where we've gone from top to bottom. And this is where we are going from a little bit of a support floor down, back up, towards this particular level. So when you look in retrospect and we kind of highlight over this particular level over here, all of this inside this red area is what is currently going on in the market. This is much more dominant over a longer term period than a single week of pushing up this much. Let's be honest, we went from $30 to around $34,000. It's a $4,000 gain. We've gone from $65 down to $30,000. That is a big difference. And when you look at it from perspectives of imagining without the candlesticks, without anything else, it can change your perspective massively. Now, my biggest concern right now, looking from a line graph perspective, is the cruciality of this particular level here. We can see here, after rallying significantly, there are no real dips, no real level of support down below, which tells me below this level, the next real area is down here at $18,000, exactly where we start to see the next real dips and declines in the market. This is the last time we really saw any form of support and resistance formed before going massively bullish to the upside once more. And this is again something I feel many people are ignoring. This level has already been broken lower. Overall, we are progressing lower, 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 lower. We are making lower lows and lower highs. And as we can see even from this weekly perspective here, we are essentially in a downtrend to some extent. We have broken through, But again, the high is over here at around $35,000. The other high is over here at $39,000. So unless we significantly break through $39,000, we are not really in any form of a different market. And in fact, when you go back to candlesticks, this wick here at $40,884 is absolutely crucial. If price cannot break above this particular level, there are no hopes for any form of bullish momentum just yet. And as we can see from this downside here, progressively, no matter how you look at this, many people think this is accumulation. This is that wick off theory, whatever the hell that is. I'm not even going to bother looking into that. This, for me, is showing the bearish momentum. There is so much pressure being applied to the downside. And of course, when people start to gain hopes that this is the reversal, we have to understand these markets are manipulated. These markets are designed for you to not win. You are not designed to win in this game, which is why people hodl. Because in their heads, they think if they hold, you don't lose if you don't sell. Unfortunately, if you have diamond hands, you're very likely going to end up with dust in your bank account as a result. And I don't really want anyone to suffer that kind of fate. So it is very possible we could be seeing some drives into this area over here. This whole zone from around $40,884 is crucial. So is the downside around $30,000 or so. The whole region over here is absolutely crucial. We are range bound. But the fact of the matter is, after such a significant drop, the bulls have not regained their momentum and control over this market, which shows we are still in a seller's market, because progressively these candles are moving lower and lower and lower over time. So it all depends on what happens in 1 day and 10 hours to gain even more clarity on what could potentially be happening next. But I personally feel this level over here of around $48,000-$50,000 will return before we bottom. This whole region needs to be retested. But what could be happening before then is another drive lower. We have to remember right now, the goal of these market makers is to wipe out the retail trader. It's not FUD, it's true. It happens all the time. And it's no convenient, everyone says to me, but institutions are on board. Why are they buying? They wouldn't be buying at these prices. Well, Elon Musk bought at $30,000. He told everyone at around $40,000, $50,000, he was out already. So when we were at this point in time, when Elon Musk was buying and Grayscale was going wild, everyone said this is too big to fail. We will never see these prices again, which is one of my favorite quotes ever in crypto. We will never see these prices again. And then unfortunately, these people who kind of feed you that information, they have no idea what they're doing themselves. And they are just trying to gain followers, money, whatever that may be. They don't really know what they're doing, let's be honest. And when we say we will never see these prices again, rule number one in crypto is never say never. Everything is possible. And it's often what you will not want to happen that will very likely end up happening. And that is why, even though it's not 100% perfect, no formula, no strategy, no method ever is, I always work and do the opposite of the herd and the opposite of the sheep. Because even if in the moment it may not seem likely, eventually over time, and if you're willing to be patient, you will realize that the herd and the sheep are simply just jumping on to the recent trend, and they lose faith, they lose reality, they lose touch of reality. In fact, if you stay with the sheep, you follow the herd, eventually you will suffer the same consequences as the herd. And when the going gets good, they all think it's all good, it's happy days, we're going to the moon, but reality can often come back and slap you in the face very, very quickly. So this area over here is definitely of interest. I cannot disregard that. But I do feel we could be seeing another shakeout first, down into that $18,000 region to fulfill those CME futures gaps. And then what we do from there onwards, working in advance, we go from top to bottom on the Fibonacci. Things get very, very, very interesting, because we can now imagine if price is to wipe out the lows over here, and we can highlight these lows again one more time for you. No, you see the empty space here? And also, let's just go back in time. This is something I showed to the members yesterday in that gruesome 3-hour session. You see in the 2017 bull run, we had one real bearish candle go down before the rally really took off significantly. This was the real starting point of the significant. We didn't really have too many small candles. The candles were just large, bullish, and on absolute Goliath momentum rally. We can see here this bearish candle around this particular level over here. Price came down, tapped into this level perfectly, the real starting point of that bull run around November prior to the crash. It then tapped this level, regained some momentum, fulfilled some Fibonacci targets, and then created another lower high and progressively rolled over into consolidation. Now, if we go over and we look at this particular time frame over here around October, November, and we go over here and we look at the same area, can you see here where the first bearish candle really started before the bullish candles started increasing in size? We are essentially mirroring 2017, 2018, 2019 right now. If we look over here, before that breakout, that was November 2020. We go over here, that was November 2017. Looking at this particular level, this is exactly where the $18,000 region is and exactly where the CME futures gap is at $18,000. So this is a massive area of interest for me, because as we've seen historically, we had the move down, and the final push lower. We've had the push down, and we need one more push down to fulfill the exact same historical pattern that we saw in 2017, 2018. It's all moving in almost accordance with one another. And it's very, very interesting, and very interesting indeed to be monitoring this in real time. So when we look at it from this perspective, we can also see there was a significant pullback towards those levels before consolidating. And I am starting to think we could be seeing a slow descent down to fulfill these levels. Now, looking at these targets here, if we do come into this area, the price action conveniently aligns and the Fibonacci conveniently aligns with a retest higher, taking us into that 61.8% and $48,000 region support, where conveniently that 61.8% retracement aligns with the wick over here and that support level over here. Can even make that a bit lower and push it down to this region. We can see even further there is a potential for a 78.6% retracement at this level. Now, as we can already imagine, if people are getting excited about this movement over here, can you imagine how excited they would get upon a drive up to this level? They would think everything's back on play, we're going to the moon, and then reality kicks in, just as it did over here. And we go all the way down to the Fibonacci target, which conveniently aligns with my $6,000 region from a longer term outlook. And you have to remember and understand these can take weeks, months, or even years to come through. That's why I don't really care what goes on in this present moment. I don't care if we go up first or down first. But what I do personally feel is there could be a significant shakeout coming into play before we potentially see a retest towards these regions, because a lot of bulls have been damaged. And this area in particular is of massive, massive interest to me, because this is where we saw that first significant bearish candle. So even if we want to increase this zone over here from around $45,000 up towards around $50,000, this whole zone is where buyers, especially the retail trader, aggressively started buying due to Elon Musk and everyone else. Especially when he announced around 50k or so, everyone started aggressively buying. Now, institutions were even buying over here. The grayscale unlockings, many people were in a significant loss following the grayscale unlockings as well. So we can imagine a lot of buyers are trapped in the market around this particular region. And after being wiped out and annihilated by these bearish candles, it is inevitable to believe that price could potentially come in to fill this area. The bulls can regain some lost territory and then join the bears in dumping this all the way to the ground to then continue the next cycle where things will likely go even higher. And that's always the important thing I have to mention. I'm not doing this to scare people. This is not FUD. This is just being a bit more realistic and understanding that it's very, very possible. And again, if you consider it FUD or dismiss it as FUD straight away, you're unfortunately still trapped in that newbie mindset of only believing in bull runs and even believing the word FUD. The word FUD is absolutely ridiculous. It's, you cannot disregard everything as FUD when it could still potentially be a very real thing. So judging from how this is all currently moving, I am very interested to see what would be happening next. But overall, I feel with the amount of euphoria with this level holding, as we've seen before, price then progressively moves lower, lower, lower. And this for me is the final level of interest for BTC. I do not think it will break below this low, but I think it will get very close to that $6,000 to $5,000 region to continue repeating the process of the next bullish cycle. The market's moving cycles, unfortunately. And when you go from 65k, you have to be willing to accept, if you think and believe for whatever fabricated reason that we can go to $1 million or $100,000, then you also need to accept that unfortunately the market doesn't care for positive news. It doesn't care for new partnerships. It doesn't care for good fundamentals. When the market goes bearish, it does not care. And all that means for me is the bigger the fundamentals get, the better partnerships they build, And the more utility and adoption we see, that just tells me if we end up bottoming out to these particular levels, we are going to see a much more significant rally to follow from this point. The euphoria here has been bigger than ever, and unfortunately that means a lot more people still need to get taken out of the market. At the moment, a lot of people are still significantly bullish. Now, what I can imagine happening is, as the euphoria continues growing, especially if we see a little bit of a push into the 36k region in particular, people will start buying again. Then what will happen is, it will crash and potentially take them out, filling the CME futures gaps. Now, what will happen from that point onwards is people will start going into a much larger drawdown. This will of course scare them, and this is where panic sellers will really come in. Because there is so much attention on this particular zone, being an accumulation zone to gear us up for another bull run, this will be a big shock for many people, and this will scare people into thinking that maybe something drastic is about to happen. And that's likely the point where a very significant rally comes into play. After those buyers have been wiped out and the panic sellers come into play, the market rallies once again, allowing those institutions to not only capitalize off the shorts, but then drive price higher to profit from the bullish movement, regain any potential drawdown and losses from this crash lower, to then close that position, use the profits from the bullish drive upwards, to then gain and add towards their short positions, to then create an even larger dump to the downside. Now, mirroring this on XRP, something I showed to the members is very interesting, is how much smaller from a 4-hour perspective. Number one, there are counter trends for days. We are breaking lower, using the counter trends over here as a sign, we are breaking lower, 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 and lower. And I've highlighted these zones to show you we're number one in the channel going downwards, and we are also seeing significant bearish movements lower, whereas the bullish periods and the bullish phases, bullish swings are progressively getting smaller in size and smaller almost in time as well. Whereas the bearish drives are getting longer, but also creating much lower lows in the process. So this is something I've been paying attention to recently, but more importantly, I personally feel that if we see the BTC drive down towards around 18 cents or so, not 18 cents, $18,000, then I personally believe XRP will probably crash down to 30 cents next, a very significant blow to many people. I also believe this could take Ether all the way down to potentially around $1,000 to $800, where we'd then see another significant rally higher. Then LTC would very likely be seeing around 80 towards $60, where funnily enough, $60 was my bear market target, but it could even go lower potentially from this point in time. But at the moment, my main focus would be seeing LTC coming into around $80, Ethereum to around $1,000 to $800, and XRP down to around 30 cents, where we would then very likely see that momentum drive all the way back up before continuing the next phase lower, mirroring exactly what we saw in these periods of time, with breaches going lower, lower, and lower, even though we see the pumps higher. And I remember these moments very vividly because people were using any form of fundamental justification to claim the bull run was back on. Buy the dip, buy the dip, buy the dip, buy the dip, until eventually there are no more dips left in stock, unfortunately. And what happens here is with every progressive swing higher, the euphoria kicks in, people continue hodling, the market wipes them out again, even going lower, until eventually everyone's back at break even or a significant loss. And what happens at that boiling point of fear? People sell, they panic sell. And what happens when everyone's wiped out? The market goes parabolic once again. Now, what happens in this current point in time? Just zooming out, ignoring everything else, the market is driving that euphoria. There may be temporary dips along the way, but at present, every single dip has resulted in a further dip and a further dip. So whilst it does look like it's potentially gaining that momentum, inevitably every single potential pump higher we see, as we've seen before, we saw the huge push higher, we dipped lower. We saw another little drive, we dipped lower. We saw another massive rally, we dipped lower. And then we went lower again, and then again and again and again, until progressively the trend goes downwards, as we can see over here. And I feel this is going to start being the exact same case. How many people thought this would have been the significant breakout? Exactly as we see here with the accumulation, people thought the support floors holding, this is going to blow through the roof. But no, these are created and manipulated and formed by market makers to lead you into believing a support floor is holding, so you can continue buying every step of the way until they wipe out everyone. And the amount of people that were accumulating here got absolutely annihilated as it lost another 100%, 50%, sorry, not 100%. We saw a 50% devaluation, and then we saw the drive higher. Then we saw it down again, and progressively it continues higher. So I think it's very important to remain focused in this period of time. The weekly candles, again, guys, are the main areas you should be looking for. But inevitably, if we do see this all unfold, then we need to start understanding that XRP could be going back to 10 cents. Ethereum could be going all the way back down below $200. Now, my target, as you guys know, is $200. But we could even be seeing $100 if this comes all the way down to mirror BTC. LTC, this could be coming back to $40 or so, maybe even breaching into the 30s. All of this right now is adding up for something very, very interesting. And as we can see over here, progressively rolling lower, the exact same analysis applies. We had a huge crash. The bulls could not regain that territory. We have rolled over, breaking that support floor, now retesting as resistance. We're seeing temporary pumps. We've seen this many times. We saw a bullish candle here. But at present, this is not mattering because price is rolling down every step of the way. Ethereum, to give credit to Ethereum, it has technically broken the floor. It's mirroring BTC at the moment. But overall, crash, failure to break above. The bulls lost momentum. The bears rolled over and rolled over. So going from a daily perspective as well, we are still progressively shifting lower, breaking the low each time. So what we want to be paying attention to this week in particular is another potential Fibonacci retracement. We've just hit the 61.8. We are now potentially pushing into this region of around $2,300. But if this area maintains, this could be leading to the $1,000 region coming through next. I'm talking the low $1,000 region, simply following that Fibonacci cycle. So when we put this all in perspective and we even go to the BTC or XRP weekly, again, the rollover, the low's been taken out over here. This could drive up and retest if it really wants to, but guess what? All in all, this is remaining bearish. The lows have been broken. The daily perspective, there is no real bullish momentum in this market right now. And looking at a very small pump like this does not mean the market is bullish. You have to look at the bigger picture and understand that this support floor was very similar. It geared up. Everyone said, this is it. We annihilated through. So it is very likely we could be coming back into this region. It's very possible. 80 cents makes sense. I mean, have a look at this. Support floor hasn't been retested since breaking below. So even if it comes all the way down here, it doesn't change a thing. The market is inevitably, this high has to be broken of $1.10 to see any form of breakout to the upside. BTC, we have to break above $41,000 or so. Ethereum, realistically, we have to break above $2,900. LTC, we have to break above $208 to really see any form of bullish momentum come through. Until then, and until we remain within the boundaries of these levels, don't stress it, don't overanalyze, just sit back, stick to those weekly time frames. The monthly closes in around 7 days and 10 hours as well. So we need to sit back, stick on that weekly time frame and wait and see what happens next. But inevitably, the longer term picture remains. I believe we are going the whole way back down. Because the euphoria was so significant, I believe the wipeout is going to be even bigger. And then I personally feel what could be occurring from this wipeout coming into play, including the addition of hopefully regulatory clarity, a settlement on the SEC case, positive regulatory action, a green ecosystem for BTC. Things could change drastically, and only from then onwards will we very likely see that true bull market people will be talking about. And I also do believe it would be the last bullish cycle that would be a parabolic bullish cycle. If we do see this come down and wipe out everyone, I do believe it will be one more bullish phase where we go absolutely parabolic. And from there onwards, as the market starts progressing into a more adopted infrastructure where it's utilized more globally, it will slowly but surely move in line with something like an index. Let's just say it moves in line like the S&P 500 or whatever that may be, the FTSE 100. It will likely become more organic and linear over time. Because remember, this will not last forever. We will not be having parabolic rallies forever. That's not how life goes. In early technology phases, we always have parabolic booms. We have the tech boom, the dot-com boom, that kind of stuff. always happens in the very early inevitable stages, but it's often during the bust, the key bust, that we see another return back to the highs, where we then naturally progress higher over time as the technology continues to be adopted and utilized by large corporations, societies, even entire countries and ecosystems could be changed by this groundbreaking technology. But it's very important to be realistic with yourselves and remember, we are in the early phases, we are still in an unregulated territory, and right now that is the biggest talking point of the entire market. The news articles are mostly about regulations. The large central banks, the regulatory bodies, they are all pushing for adoptions. They are pushing for stablecoin regulations. They are pushing for CBDCs. Now, CBDCs could even be a big threat to the cryptocurrency market, besides coins, obviously, like XRP, because CBDCs will then essentially deem things like Bitcoin or any other payment network, or stable coins in particular, as threats and competitors to the countries or government-owned stablecoin CBDCs. So that also means that could be taxation and heavy regulation on stablecoins. And as we know at present, it's USDT, which is essentially a fabricated, made out of thin air asset claiming to be a US dollar alternative that is pumping and aiding the growth of this market. And if we see, especially with those Tether audits and everything else, any form of grey area, I can only imagine the largest significant impact that will be used as a justification to crash the market and then introduce CBDCs to level the playing field and bring us back to an equilibrium before starting all over again.